Good afternoon and welcome to the program. This is Business Incorporated. I am Boston Omofayowe. Thank you for finding time to join us on the program today. Now, coming up on the program, China's foreign trade declines 4.5% year-on-year to 2.16 trillion yuan in November, the 9th consecutive month of declines. Canada and Mexico victorious over the U.S. trade law requiring country of origin labeling on beef and pork. Meanwhile, the G7 and the 28-member European Union bloc back plan to generate 300 gigawatts of electricity from renewable sources in Africa. That's by the year 2030, I beg your pardon. And there's $10 billion on the table to achieve that electricity output. Now let's get the details of these and other stories for the next 30 minutes. China's foreign trade in November dropped 4.5% year-on-year to 2.16 trillion yuan, and that's about $337 billion US, the 9th consecutive monthly decline. The drop range in November significantly contracted when compared with a 9% year-on-year plunge in the index registered in October. The General Administration of Customs data shows exports declined 3.7% to 1.25 trillion yuan, and imports fell by 5.6% to 910 billion yuan. The trade surplus expanded by 2%, however, to 343.1 billion yuan. In the first 11 months, foreign trade declined 7.8% year-on-year to 22.08 trillion Chinese yuan. They were separated into 12.71 trillion yuan for exports, down 2.2%, and 9.37 trillion yuan for imports, down 14.4%. Meanwhile, the trade surplus surged 63% to 3.34 trillion yuan. The EU, the US, and the Association of Southeast Asian Nations, called ASEAN, remained China's first three trading partners in the first 11 months of 2015. The exports to the US and the ASEAN saw continuous increases, while exports to the European Union went south. And talking about the world's third largest economy, Japan has avoided a technical recession in the 3 months to September. Preliminary numbers released last month indicated the economy shrank at an annual pace of 0.8% during the period. The preliminary figures meant it was Japan's second consecutive quarterly contraction, which constitutes a technical recession. However, the new data suggests the economy grew at an annual pace of 1%. Japan, which is the world's third biggest economy, has been in recession 4 times since the global financial crisis of 2008. Now let's bring you up to speed for today's markets in Europe. It's been a very reddish day across the global market, starting with Asia. Now Europe are all in the red, and the futures markets on Wall Street looks like it's been another negative Tuesday. All this from Friday's OPEC decision to leave output among member states unchanged and opened the way for more oil to be put on the market at a time when prices are declining very rapidly. U.S. oil is now $37.77. That's climbing back a little bit of 0.29%. But we have more negative commodity stories from the solid metals. Metals melting today with that profit warning from Anglo-American Platinum. That's one of the top stories today. Let's cross over to Javier Aguedes, who is a DWTV financial correspondent for Channels Television at the Frankfurt Stock Exchange Live. Javier, good afternoon to you. Now, the commodities crisis, especially metals, looks like they're taking over from crude oil yesterday. So bring us up to speed on how the market is taking this story from a resource point of view.
Well, what we are observing is, in fact, the loss that many companies will possibly have to confront in the next couple of weeks or months or years as a result of these falling prices, because it's not only hitting the oil companies or the oil and gas sector, but also, as you mentioned, the commodities. The most important or prominent loser in today's trading session so far is ThyssenKrupp, which is one of the most important steel companies here in Germany, and that shows us how this problem is expanding expanding to several other sectors. Of course, if you take a look at the oil and gas segment in general, energy companies are also losing sharply right now in today's trading session, because we know that the oil companies especially will be hit by the production rates being kept and by the oil prices possibly falling even further in the next future. So that definitely has a big impact on the stock markets, because remember that from the 10 most important companies in the world by revenue, 7 are oil companies. So that definitely is something to take into consideration as of the weight that they have in the stock markets.
Well, one of the key drivers of this commodities conversation I have here has to do with currency. The U.S. has been really strong. I'm looking at a euro-dollar parity now at 109, slightly better for the euro. Talk to us about this currency conversation in the middle of the entire commodities crunching at the moment.
Well, of course, everything is related to everything. You can always make a link between how the commodities relate to the performance of some countries and how they are going to be affected by how the dollar price is also going to develop. Here
Stick around after the break.